Hi, this is James Shug with Westpac London's end of day report for Monday the 29th of October. Well, Frankenstorm, that's Hurricane Sandy combined with various other meteorological phenomenon has pretty much shut down Manhattan with the metro, the underground not running, the buses not running. Markets there are closed. There was some trading in the bond market, we think, but the equity markets based in New York were all shut today and may well be shut tomorrow as well. There was some uncertainty about whether today's economic data schedule would be achieved. The newswires were a bit late with the data, but it was released. That included a personal income gain in September of 0.4%. Personal spending was stronger than that, up 0.8%. The core PCE deflator, measure of inflation, was 0.1% for the third month running. So right through the quarter we had, the third quarter we had 0.1s. All of that though was kind of known because we had the quarterly totals in the GDP figures last week. The other piece of data was the Dallas Fed's factory index, which rose from -0.9 to 1.8. It's the third rise in a row, although it still hasn't fully recovered the steep July drop from, what was it, let's see, the July drop was around about 19 points, that's right, a 19-point drop in July. In 3 months since then, it's recovered about 15 points. So it's the only Fed factory survey so far this month, though, to have a positive jobs report or jobs index. It edged lower from 6 to 5, but that compares to the New York, Richmond and Philly Fed surveys, all of which have negative jobs indicators. And that's one of the reasons why we're looking for a fairly soft payrolls report, which is due out on Friday, weather permitting. In Germany, inflation was steady at 2% in October in their preliminary report. In the UK, we had mortgage approvals, which rose back to 50,000 in September, back to around where they were in May, but still not much evidence there or in the outstandings data that were published today that the new cheap funding for banks, as long as it's lent to households and businesses, that scheme is really gaining much traction. Not much evidence of that yet. House prices, as reported by Home Track, they were down 0.4% over the past year. So not too much on the data front, really. The Greek shenanigans continuing. There's talk about a Greek bond buyback, but the possibility of a further write-down by the creditors of Greece has been ruled out by various parties, including the Germans. November 12th is seen as the date when we're going to see the final announcement made about whether Greece gets the next bailout tranche, what sort of leniency will be granted to Greece in terms of an extension to its budget deficit reduction programs. I mean, the latest news out of Greece related to tax is that so many senior figures, celebrities, what have you, have been avoiding tax. Some of these people have actually been charged with helping to restore Greek finances, yet they haven't been doing their bit, it seems. Okay, so on to markets. As I say, US markets closed today, European markets mostly down. The London market down 0.1%, the French market down 0.7%, the Germans off 1/3%, the Spanish market down 0.7%, and the Italian market off 1.7% today. And that's an hour or so before the close. Commodity markets, we've got copper down 1.4% today, oil down 0.4% at $85.94 a barrel, and gold's down 0.2% at $1,708 an ounce. The Aussie dollar's at 1.034 against the US dollar, just down a tiny bit. Pretty quiet day today, really, particularly out the US trading. Volumes in European markets down around 1/3 on what they normally are. So rather than just make a lot of noise, I'll end it there and come back tomorrow with perhaps more to report.